Welcome to Bull Bear Dividend Daily. We bring you the latest dividend stock news, smart passive income strategies, and daily market insights to help you grow wealth and earn income for life, one dividend at a time. Subscribe and invest smarter.
Detailed breakdown of what a Black Monday stock market crash could look like if Iran triggers a major geopolitical shock, such as a war, direct conflict with the US or Israel, or disruption to global oil supplies. What is a Black Monday in the stock market? Black Monday refers to sudden, massive stock market crashes that typically occur on a Monday. The most infamous one happened on October 19, 1987, when the Dow Jones plunged 22.6% in a single day, the largest one-day percentage loss in history. A new Black Monday could happen if global markets open after a weekend of shocking geopolitical news, such as Iran launching a major attack, closing the Strait of Hormuz, or triggering conflict in the Middle East. Possible Iran-related triggers for a stock market crash. Here are scenarios where tensions with Iran could lead to a Black Monday-style crash. 1. Full-scale military conflict. If Iran goes to war with the US, Israel, or another major power, global markets would likely panic immediately. Defensive stocks, e.g. Lockheed Martin, Raytheon, could spike. Tech and consumer discretionary would tank major indices. S&P 500, Nasdaq, Dow could drop 5 to 10% plus in a single day. 2. Closure of the Strait of Hormuz. Iran controls access to this vital waterway through which 30% of the world's oil supply flows. If it were closed, oil prices could skyrocket to 150 plus per barrel. Global inflation fears return instantly. Airlines, shipping and logistics sectors crash, energy stocks and commodities surge. 3. Terrorism or cyber attacks. If Iran or its proxies launch cyber attacks on financial institutions or energy infrastructure, market volatility explodes, banking and tech sectors plummet. Gold, crypto, especially Bitcoin, and defense assets rise. Why Mondays are especially vulnerable. Markets are closed over the weekend. So if a major geopolitical incident breaks out Friday night or Saturday, traders can't react until Monday morning, leading to massive sell-offs at open circuit breakers, halting trading temporarily, global contagion as European and Asian markets react first. What happens next? If such an event occurs, here's what usually follows. Massive volatility, VIX index spikes, central bank intervention. The Fed might calm markets with liquidity or rate cuts. Flight to safety. Investors move money to gold, USD, and US treasuries. Short-term panic, long-term rebound if war doesn't escalate. How to prepare as an investor or trader. Before such an event, diversify into safe haven assets, gold, cash, defensive sectors. Watch news around Iran, especially oil, Israeli conflict, and US Navy movements. Set stop losses on vulnerable positions. Consider inverse ETFs or options hedging after the event. Look for overreactions to buy quality assets at a discount. Avoid jumping in too early. Wait for stabilization signals. Follow energy and defense stocks for potential upside. Final thought. If Iran sparks a major geopolitical event, Black Monday could become a reality again. Global markets hate uncertainty, and the Middle East remains one of the most sensitive and explosive regions geopolitically. Whether you're a long-term investor or short-term trader, staying informed, hedged, and calm will be your best defense against panic and chaos.